All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Monday, everybody. I hope you all had an excellent weekend. Today is July 14th, 2025. And the top story this morning is the rally in silver and Bitcoin. It continues again. It's been a good day so far. It's been a good couple of days. So first, let's talk about what's going on in silver. We broke $39 overnight. We've retreated a little bit from that level. We're still right around that $39 level. Guys, there was an article late last week in Bloomberg. This guy from TD Securities using some unusually alarmist language to describe what's going on with silver stockpiles in London. And it was eerily reminiscent of 2021 silver squeeze kind of talk, but this wasn't social media personalities. This wasn't an influencer. This was a guy from TD Securities. And he's talking about how the liquidity, or the words he used, the illusion of liquidity in silver markets, there just are not enough of these good delivery bars in London. According to what he's saying, I don't want to be accused of being, the sky is falling in the silver markets again. But the gist of the article is all the silver that's left in London belongs to the ETFs. And because of the flow of metal from London into the U.S. during the buildup to the tariffs, there's just basically very little metal left up for grabs in London. And now that we've got those tariffs and copper that have come about, it's reignited that trade a little bit. And he used the words a physical squeeze to describe the only way that markets could correct here. Look, that's some pretty strong language from a guy at TD Securities. And on top of that, we've got this prices continued to move. We've got the gold to silver ratio is coming down. It's now at 86 this morning. We were as high as 105 a couple of weeks ago and still falling, but we remain historically high. The average of the last 40 years or so has been about between 62 and 65. Here we sit in the mid 80s. So, I mean, it's reasonable to assume we could continue coming down into the mid 70s before things get even anywhere near their averages. In other words, silver has a room to run here, at least according to the charts. And now we're in that no man's land between the low 30s and $50, that all-time high from 2011 and from the Hunt brothers in 1980. And, there's not a whole lot to hit your head on between here and $50. And if we do go back to $50, then that chart that we've all been watching, my silver bugs out there, you guys know what I'm talking about, that beautiful mother of all cup and handle charts. It goes all the way back to 1979. We complete that chart. Well, then some of those more wild price predictions about silver become on the table if we break through that level. So we'll look at that chart and look as the gold to silver ratio comes down and as silver is threatening to complete this mother of all cup and handle patterns, you've got gold is putting in a bull flag pattern, suggesting that gold could make another leg higher pretty soon. What's going on here? Well, we know what's going on here. The government fiscal situation, the reckless borrowing, the money printing, it's driving gold, silver, and Bitcoin all higher. And speaking of Bitcoin, overnight we hit 123,000. We're just off those levels now at a much more modest 121, maybe 122. Who's looking? It's been like 30 seconds. We're in that phase when the Bitcoin bros are just doing this, refreshing their phone every 30 seconds to see how much money they're making. Which, congratulations, by the way, guys. If you're making money off of this, great. Keep in mind the leverage. Be careful. Crypto winter is on the horizon, but we could have a lot of upside before that sets in. We've got Crypto Week, they're calling it, in Congress. There's a number of bills that are going to get voted on, including the Genius Act, which already went through the Senate, now waiting for approval from the House. If this legislation goes through, it could expedite mainstream TradFi adoption of Bitcoin, which frees up additional money to go chasing Bitcoin, which takes Bitcoin prices higher. I know we got a lot of Bitcoin haters on this channel, guys, but you're just going to have to swallow this one. Bitcoin could be heading higher for quite a while here. Now, already this post-April 9th rally, we'll call it the post-taco rally since Trump blinked on trade, Bitcoin has rallied $46,000 just in those couple of weeks since then. Now, speaking of the taco trade, we had more tariff announcements over the weekend. President Trump on Saturday morning announced 30% tariffs on Mexico and the European Union. Look, those two we'll say countries. EU is not a country, it's a gaggle of countries. But between those two groups, we're looking at about 1/3 of all U.S. imports, more than $1 trillion annually in trade. And the market doesn't care. I mean, we're down a little bit this morning. The Dow's off like 100 points and change. We'll get to that in a second. But the market's kind of shrugging this off. 30% tariffs on some of our biggest trading partners. Market doesn't care. Taco is the prevailing wisdom. Stocks near all-time highs. Bitcoin all-time high. Gold, silver all-time high. This market is in melt-up mode. It just continues here. And look, maybe the taco guys are right. Trump has blinked several times already on trade. And, the word vacillating tariff rates has been thrown around in the press recently. I got a kick out of that. So maybe he blinks again. But the market is pricing in very little chance of maybe not. What if he doesn't blink again? Well, then we're back to the bond market throwing a fit like we had in that first week in April. And, market has moved significantly higher since that happened. So there needs to be a little bit of a what if in the back of people's minds as we just continue to disregard all these tariff headlines. Among those, the copper tariffs, by the way, which are influencing silver prices. And there's another article this morning in the Wall Street Journal about how they're scrambling to get this copper mine up and running in Arizona. They were going to build more suburban subdevelopments, and then they're like, no, we'll put a copper mine there instead. So maybe that's a sign of things to come. Now, in the backdrop of all of this, as I said, I think all of the reason these assets are just going vertical is because of reckless fiscal situations enabled by central banks and monetary and fiscal policy around the world. Print and spend. Well, we got some headlines to that effect in Japan this morning. Long bonds in Japan are selling off big time again. The Japanese 40-year JGB the yield is up 17 basis points the last I looked. A big sell-off in those ultra-long Japanese bonds. So what is causing this spike again? You've got jitters over the elections, the current party in power in Japan, which I don't study Japanese internal politics that closely, so I'm not going to comment on it. But the current party is wildly unpopular because the price of rice has doubled in the last year. Holy crap, the thing everybody eats doubles in price. Yeah, you're going to take a hit in the polls on that. And they're saying no matter what happens in the election, if one party wins, you're going to get helicopter money in order to offset the price of rice, enabled by borrowing and printing. If the other party wins, then you're probably going to get a cut in the sales tax or something. In other words, more borrowing. Either way, it looks like the Japanese government is going to be leaning even more heavily on its bond market, which means more borrowing, more bond supply, lower bond prices, and higher interest rates. At the same time, we've got a headline this morning that the Bank of Japan is considering raising their inflation forecast after the price of food doubled. Nice way to get out in front of that one, Mr. Ueda. So higher inflation expectations in the future, that would also cause investors to demand a higher interest rate in order to loan money to the government for 40 years. Yikes. And so those two things combined are sending borrowing costs in Japan sharply higher. And last but not least, Ghislaine Maxwell says she's ready to talk. That's interesting. Ghislaine Maxwell, that lady who is in jail because she ran an international sex trafficking ring with Jeffrey Epstein, who apparently killed himself, but they had no clients. Yeah, about that. By the way, this has blown up in Trump's face. You campaigned on releasing the list, and now you're telling us the list doesn't exist. Your base is pissed, and rightly so. Enough of this crap already. If we got to get the information from freaking Maxwell, we'll get it from freaking Maxwell. Release the dang list. And with that, why don't we shrink my big melon of a head and let's see what's going on in markets this morning. That is the wrong screen. There we go. Hey, don't forget the like button and that subscribe button for the YouTube algorithm because we do this one every day. So come on back and have your coffee with the melon heads because we do this every morning. The S&P this morning, down 18, 19 points, 1/3 of 1%. All right, it's a red day. You may have noticed the bear in the thumbnail. But considering 30% tariffs on our two biggest trading partners, the market is really shrugging this one off. I'm surprised it's not down more. The Dow, meanwhile, down 151 points, about 1/3 of 1%. Again, we're in the red, but just barely. I guess I shouldn't say I'm surprised it's not down more. I guess I'm just saying it should be down more if people really believed these tariffs were going to come to fruition. And the market is telling us, no, we think taco is going to happen again. And the NASDAQ is down just 0.25%, 58 points in the red this morning. So we do have stocks down across the board, but just barely. We've got the U.S. dollar is a little bit stronger here, 97.96. That's up 11 basis points this morning, threatening to break back into that 98 level, although still well below levels we saw last year. Looking over at the bond market, we got a mixed bag this morning. Yields are higher on the long end, a little bit lower on the shorter end. The 30-year Treasury, 4.984. That's higher by almost 3 basis points. The 10 years at 4.438, higher by a point and change. The 2-year yield, meanwhile, is down almost 2 basis points at 3.896, and the 1 month is down a fraction of a point at 4.316. So kind of quiet in the U.S. bond market this morning, not the Japanese one. Now let's go look over at the commodities board. We've got gold just swung to a negative. All right, we've had a little bit of movement in metals just since we hit the live button. Gold is now down $3. It was higher by more than 20 earlier this morning, 0.1% lower for spot gold. Spot silver is higher by 39 cents or 1% to the upside. It was higher by about 60 cents earlier this morning. Right now, we're at 38.76. We hit an intraday high of $39.13 for spot silver. Also, note what's going on here in the September contract. We've got $39.01 for the September contract. That's only higher by about 6 cents. So we've got the London spot price is starting to catch up to that New York COMEX price. Last week, after the announcement of the copper tariffs, we saw this big gap open up between the spot price in London and what people were paying for silver a month from now in New York. So we're starting to see that gap close a little bit as the metal flows back into the States. But as always, I like the shiny. Now let's just look at a couple of other things here. We have got platinum is lower by 3.1%, though still above $1,400. Palladium is lower by 2.7%, and we got crude oil is up about 0.5% at 68.79 for those August WTI contracts. Did I talk about copper? Copper is down by 1.8%, $5.50 for September copper futures, still near an all-time high. All right, so let's look at a couple of things. First of all, this article was pretty crazy. I mentioned this in the opening. This was on July 10th. This was late last week. I don't know how I missed this one Thursday morning, but there it is. Silver rises to highest since 2011 as U.S. premiums grow. Now, we'll skip over some of the commentary on the price because the price has already moved significantly higher since then. But I want to zero in on some of this commentary on silver liquidity in London. The implied annualized 1 month borrowing costs for silver in London jumped to approximately 4.5% on Friday, well above the typical near zero rate. Higher lease rates indicate a tightening market. So you got people are paying buku bucks to borrow somebody else's silver. Right? Normally the rates are near zero here. Now all of a sudden they're 4.5%. That means somebody is short and needs metal. Somebody wants to hold on to the metal temporarily for whatever reason. And the cost to do that is going vertical. Now, most of the silver in London is held by exchange-traded funds or ETFs, meaning it's not available to lend or buy. The white metal has recently been bolstered by solid inflows in the silver-backed ETFs, with holdings up by 1.1 million ounces on Thursday, according to data compiled by Bloomberg. So they're saying here, most of the London in the LBMA vaults, the biggest silver hoard in the world, most of that belongs to ETFs. So when you hear about, oh, there's more than enough silver, there's plenty to go around, that silver is already spoken for. It's owned by the funds. They can't just loan it out. So when people are paying more money to borrow silver, there is a ever-shrinking pool of silver to borrow from, and that's why that cost is going up. Meanwhile, Daniel Gali of TD Securities has argued that the outflow of silver caused by the tariff arbitrage opportunity has left inventories of freely available silver in the market critically low. Our estimates of LBMA silver's free float now stands at its lowest levels in recorded history. Gali wrote in a note on Thursday, silver's illusion of liquidity tells us that silver markets will only rebalance through some form of a squeeze on physical. All right, that's some pretty strong language there. The illusion of liquidity. It will only rebalance with a squeeze on physical, the lowest levels of free float in recorded history. All right, now I have to tell you guys what he's describing here at the LBMA is the polar opposite of what you see if you go into any local coin shop in the U.S. right now. Hoarders, stackers in the United States are selling their silver back to the shops at breakneck pace. It's piling up in the shops so much that they can't sell it all. So they're sending it to the refiners to be melted down into those big good delivery bars, which is what sells at the LBMA. So you have this drain of metal, not just from London to New York, but also from retail investors to the COMEX to the LBMA markets. So you've got a bifurcation, if you will, between the two that's happening right now. That translates into sharply higher prices. Now, take a look at this. This is daily candles on the silver chart here, 38.66. So we're coming down pretty high. We were above 39 for a while here, but me and my big mouth, apparently I put a hex on it. But not just the daily candles. You can see we've had a really good couple of days. I want to set this to 1 month candles, because when you set this to 1 month candles and we zoom way out, now you can kind of get a good idea of that mother of all cup and handles patterns that people have been talking about. First things first, let's put a horizontal line right around $50. That is your cup level. And here on this side, this is when the Hunt brothers tried to corner the silver market in 1980. They rigged the markets in order to screw over the Hunts. And then in 2011, after the post-GFC QE bonanza, whatever you want to call it, the price of silver also returned to those $50 levels before crashing again. And so those two highs kind of gives you this big, what is that, a 25-year cup. And then if you look, here's your handle. And, well, it really looks like there's no resistance. There's no nothing between here and $50. So let's assume we go all the way back up to 50. That would complete, what is that, a 45-year cup and handle pattern. And, look, typically the price difference in a cup and handle is the difference between the level of the cup and the bottom. And you can add that to the water level, which, let's just say, guys, that is a very big difference. I don't know if this is going to happen, if this is going to play out, but I know a lot of people love to look at this chart and fantasize about what happens if that cup and handle pattern completes. And it's not so crazy to imagine silver going to $50. It really isn't. Look at the gold to silver ratio, $86.67. All right, that's not 67, 86.7. It takes 86.7 ounces of silver to equal the price of 1 ounce of gold. Now, yes, that is way down from our previous high that we hit back in April. We went up to 105 and change. Now we're down to 86. But once again, let's zoom way out. Let's look at 1 month candles. All right, the historical average. Let's go all the way back to 1980. Let's go back to the Hunt brothers here. All right, there we go. That's about 1980. The historical average since 1980 in the gold to silver ratio has been right around that 65 level. And with the price of gold where it is, what's gold right now? It's 33.51. All right, so 33.51. Let's say we return to that historical average of 65 in the gold to silver ratio. That takes us to $51.55. Just a reversion to the mean in the GSR gets us to completing that cup and handle pattern. That just gets us to the red line. That doesn't even take us below average. So again, this is why I kind of get a little bit excited about this, because we've all been watching these patterns develop over several years, and it looks like this could be happening. And while all that happens, keep in mind gold is just biding its time here. Look at gold. It hit its all-time high on April 22nd, and ever since then, gold has been putting in this nice little bull flag pattern, indicating the next leg higher in gold is just over the horizon. So, metals are looking really good here, guys. And until we see anything resembling discipline return in Washington, D.C. or in Brussels or wherever else, Beijing, I think you're going to see these charts continue higher. The world may be on the precipice of a revaluation in gold, which means all these things are going sharply higher. Meanwhile, Bitcoin, well, what can I say about Bitcoin other than the fact that it's up again? $121,651 is priced on Coinbase. We hit an intraday high. Let's see, where did we go? What was the high last night? $123,231 we hit overnight. We mentioned on Thursday on the stream when we broke above that previous all-time high of about 112,000. I said, guys, we're going to 120 in a hurry here. It took about 4 days to get there. And now here we are. Honestly, I'm not going to try to guess where Bitcoin might go, what its levels are. All I can tell you is we got a few more months of this, maybe. All right. At some point, somebody's going to pop. The fraud is reaching a fever pitch, guys. You probably see it. Like, be careful if you're watching the stream. I always delete these things, but they show up in the comments, and it takes me a minute to get to it. There's always going to be some scammer who's like, "Oh, great show. By the way, I have a Bitcoin wallet with these keywords in the phrase. What do I do?" Don't mess with those people. That anytime the word Bitcoin shows up in the title, the scammers show up in the comments, and it's a whack-a-mole approach. The platform does nothing about it. So just the fact that that's going on so much should be a warning to you guys that at some point this fraud is going to get so big that it's going to cause somebody to fail and tank the market. Again, it's happened 3 times already. This time is not different. Maybe we go a little higher before that happens, but it will happen. Meanwhile, Bitcoin soars past 120,000 as Congress starts crypto week. I don't know what crypto week is. That like Shark Week or something? I don't know. But Bitcoin breached 120,000 for the first time, with investor enthusiasm showing few signs of dimming as the U.S. House of Representatives prepares to consider key industry legislation during its crypto week starting on Monday. After surging on the election of Donald Trump to a second U.S. presidential term, Bitcoin had settled into a pattern of fluctuating on either side of $100,000 for several months. Concerns about Trump's political and economic policies had helped to temper optimism over the pro-crypto agenda of his administration. Now, with other risk assets such as U.S. stocks back around record highs, Bitcoin has also resumed its push higher. Progress on crucial crypto legislation is adding fresh fuel to the rally. The House will debate and possibly vote this week on the Clarity Act, the Anti-CBDC Surveillance Act, and the Senate's Genius stablecoin package as Republicans move to advance Trump's crypto-friendly agenda. The prospect of a clear U.S. regulatory framework, along with Bitcoin's steady advance in the face of Trump's chaotic trade policy, has bolstered confidence in the asset class among institutional investors. This shift signals a maturing perspective on Bitcoin, not merely a speculative asset, but a macro hedge and a structurally scarce store of value, said George Mandres, senior trader at XBTO Trading. I'll be honest with you guys, I think that's a little bit premature, the whole structurally scarce store of value. Yes, Bitcoin is structurally scarce, but a store of value, it's still too volatile to be considered a store of value. All right, in my opinion, it is still a risk asset. You must understand those risks before you get into Bitcoin. That being said, Bitcoin's volatility is going down over time as adoption gets bigger and bigger and the market gets more and more liquid. We're going to see that volatility come down, and that will be a slow transition to something less speculative and more like a macro hedge or a structurally scarce store of value. I just think this guy's getting, Mr. Mandres here is getting a little bit ahead of himself. That being said, I own Bitcoin. It's now my biggest holding. That wasn't on purpose. It just went up so much. I will be looking to take some profits between now and October. Meanwhile, Trump announces a 30% tariff on the EU and Mexico starting on August 1st, and the market doesn't care, but there it is. President Trump said Saturday the U.S. will impose a 30% tariff on goods from the European Union and Mexico that will take effect on August 1st. Trump revealed the new rates in letters to European Commission President Ursula von der Leyen and Mexico's President Claudia Sheinbaum, which he posted on his social media site Truth Social. Mexico has been helping me secure the border, but what Mexico has done is not enough, Trump wrote to Sheinbaum. Trump said that there will be no tariffs on goods from the EU if the 27-member bloc or companies within the EU decide to build or manufacture products within the United States, he wrote. He said that if the EU or Mexico retaliates with higher tariffs, then whatever the number you choose to raise them by will be added onto the 30% that we charge. So Trump is basically threatening the tit for tariff tantrum that we had in April when, okay, China's raising theirs by 30%, we'll raise ours by 31, and then they raise theirs by 40, we'll throw 40. Next thing you know, you got 145% tariffs, and everybody says, whoa, wait a minute, guys, this is effectively an embargo. The bond market throws a fit, and then Trump backs down, and we go back to the way they were. That is what the market is saying is probably going to happen. They're probably right about that, but holy crap, guys, if they're wrong about that, if we really go through with this and the retaliation starts, bond market's going to freak out again. So only time will tell. We got a couple of weeks here before that August 1st deadline. And speaking of tariffs, the copper tariffs are already starting to take effect here. The race is on to build a U.S. copper mine after Trump pledges higher tariffs. U.S. copper prices are trading at records ahead of the 50% tariff that the president has promised to impose on imports. Nearly 6,000 acres of old Arizona farmland, once intended for a residential subdivision, is on track to potentially become home to the first big new U.S. copper mine in more than a decade. If all goes as planned, Ivanhoe Electric will begin construction of its Santa Cruz mine early next year and start selling copper cathodes to manufacturers before the end of 2028. That's a blink of an eye in mining, where the time between discoveries and production is often measured in decades. The mine is on an unusually fast track as a result of being on private property along a booming industrial corridor between Phoenix and Tucson. The sooner it comes online, the better, and not just for Ivanhoe Electric investors. U.S. copper prices surged to records last week ahead of the 50% tariff that President Trump has promised to impose on imports on August 1st. Traders and analysts expect copper prices in the U.S. to remain aloft as long as the import taxes are in place, fetching a big premium to the global price set in London's trading pits. More expensive copper will boost the cost of making everything from automobiles to electronics, as well as building houses. There are hundreds of pounds of copper in the typical American home, and between electrical wiring, plumbing, and appliances, and the average car contains nearly a mile of copper wiring alone. Now, this article also mentions this chart. We blew it up a little bit here, showing the difference between U.S. futures and copper up here at $5.50 a pound, and the spot price for copper on the London Metals Exchange, which is around $4.40 a pound. So you can see here kind of the same thing we saw last week with silver, this big blowout between what they'll pay for it in the U.S. a month from now and what you can get for it in London right now. That means the metal is going to be coming here. All right. If you can make that arbitrage opportunity, they will absolutely send the metal over. And so that is also contributing to the fast track of this copper mine in Arizona. And if they're digging up copper, they're going to find silver too, because most silver actually comes from copper mines, along with lead and zinc mines as well. All right, another chart we need to watch this morning. Take a look at this one. $3 or 3.519%. This is the Japanese 40-year government bond yield. And look at the size of this candle. These are daily candles here. A blowout in Japanese long-term borrowing costs happening right now. We haven't seen anything like this since April, when we had this big move in Japanese borrowing costs. And of course, we hit our all-time high in May, when I believe that the Central Bank of Japan or the finance ministry intervened. But the borrowing costs in Japan are going sharply higher here. So what is going on? Remember, guys, higher yields, that's lower bond prices. So there's a big sell-off in these Japanese bonds. Well, right now, Japanese bonds tumble as fiscal worries mount before the election. The slump in Japan's long-term bonds intensified Monday, pushing yields sharply higher in a move that puts global debt markets on alert. Amid signs of thin liquidity and increasing worries about higher government spending in Japan, yields on bonds from the 10-year to the 40-year spiked in moves reminiscent of the surge that rippled through global markets in May. While the pressure in Japan is being heightened by the looming election on July 20th, concerns over government spending beyond their means also apply to the UK, Europe, and US. Japan's 40-year yield led the way with a jump of 17 basis points in afternoon trading, while the 30-year yield neared its record high seen in May, and the 20-year yield touched its highest since 2000. The rout in Japan's debt market also followed a tumble in U.S. Treasuries on Friday, as worries about inflation reemerged. In Germany on Monday, long-term borrowing costs were on course to hit their highest since 2011, amid concerns over tariffs and extra government spending. All right, so we got worries about government spending. Check, that's everywhere. Worries about inflation. By the way, we got CPI tomorrow and we got bank earnings tomorrow. It's going to be a loaded show tomorrow morning. Don't forget to miss that, or you don't want to miss that one. But this is very much a global phenomenon. It's affecting Japan the most because Japan has this ridiculously high debt to GDP and this central bank that is engaged in full-blown modern monetary theory. So of course it's going to be amplified in Japan. And while all this is going on, worries about what the election might do and the spending that's going to come after it, you've also got this one. Now, this was just yesterday morning. The Bank of Japan is said likely to consider raising the price outlook on food. In other words, they're raising their inflation forecasts. Bank of Japan officials are likely to consider raising at least one of their inflation forecasts at a policy meeting later this month, after rice and food-related prices rose more than expected, according to people familiar with the matter. By the way, a forecast. I thought you raised the forecast before it happens. Forecast, right? Not post-cast or after-cast. So if you're raising your forecast after the price is doubled, your forecast sucks. Just throwing that out there. That's supposed to work, all right? The central bank will probably weigh increasing its key price forecast from 2.2% for the fiscal year after food inflation proved stronger than they expected at the beginning of May when the last quarterly output was released. That's according to the people, whoever the people are. Higher oil prices provide another reason for considering an upward revision, they said. So the central bank's forecast for food inflation was 2.2%, and the price of rice, which is the staple product in Japan, more than doubled this year. So yeah, those forecasts, they're kind of lousy. And look, guys, if the market is expecting higher inflation, that's going to contribute to that upward move in long duration interest rates, because if you're going to loan your money to the government for 40 years, you're going to want to make sure you make a return even after inflation is accounted for. So higher inflation expectations would mean higher long-term interest rates, which, by the way, is why the Fed lowering interest rates will not have the desired effect on the economy that President Trump thinks. He wants lower interest rates to further juice the housing bubble and everything else. The Fed lowering rates only affects the short-term borrowing costs for T-bills. It does nothing for the 10-year, the 20-year, and the 30-year. And if you lower rates too much and people think inflation is going to come roaring back, which it is, then longer term, those interest rates might actually go up when you cut rates. And that is exactly what happened in September when the Federal Reserve lowered rates ahead of the election. They actually caused long-term interest rates to go higher. And last but not least, Ghislaine Maxwell is ready to reveal the truth about Jeffrey Epstein's list. Sure, let's give her a chance because nobody else is doing a damn thing about it. Ghislaine Maxwell is ready to testify in front of Congress about the Jeffrey Epstein files, according to the Daily Mail. Maxwell is currently serving 20 years for child sex trafficking charges and has been the only person arrested related to Epstein. One arrest. An international child sex trafficking ring, and there has been one arrest. Despite the convicted pedophile allegedly controlling a sex trafficking operation of underage girls, Maxwell is the only person who's been charged. Several of Epstein's victims have alleged they were trafficked to a pedophile's wealthy friends and clients. A source revealed to the Daily Mail that Maxwell was never offered any kind of plea deal, but that she would be more than happy to sit before Congress and tell her story. No one from the government has ever asked her to share what she knows. I'm going to read that again. No one from the government has ever asked her to share what she knows. Nobody's got any questions for Miss Maxwell? Really? Nobody? Any of you guys in the back? Nobody? Huh. She remains the only person to be jailed in connection to Epstein, and she would welcome the chance to tell the American public the truth, the source said. Just imagine this lady in Congress naming names, and imagine the look on congressmen's faces when their names get read off on the list. It's never going to happen. But hey, it'd be kind of fun to watch, wouldn't it? Look, guys, President Trump campaigned on releasing the client list. His attorney general said the client list is on my desk. And now she's saying it doesn't exist. So was Pam Bondi lying when she said the list was on her desk? Or is Pam Bondi lying now when she says the list doesn't exist? One of these things has to be true. And now both parties have done this. How long has it been? First of all, this guy ran this pedophile ring for years, unobstructed, got away with it, got arrested, got released by some chicken shit prosecutor in Florida. Then ABC News, parent company Disney, by the way, owned ABC News, had the story before this thing went mainstream. They spiked it because they wanted to be able to cover Will and Kate's wedding. Oh, that was so important. Yeah, that's Disney, the largest children's entertainment company in the world, hid this story. Now we've all known this is true for years. The guy killed himself in prison during a minute when the cameras were off and when the guards were supposed to be watching him. Yeah, okay. Then President Trump campaigns after years of the Biden administration doing nothing. President Trump campaigns and says, I'm going to release the list. Then he gets in power and suddenly the list doesn't exist. The only possible answer is they are all on the list. All of them, both parties. They're all a bunch of degenerates. Gotta love it. Gotta love the state of the world, folks. And I just want to say thank you very much to Nashville Pasta Man, who says a world in which $120,000 Bitcoin is expected, but $10,000 gold, $800 silver is an anomaly. Good morning, Jack. Yeah, look, the $10,000 gold I think that very well could happen. I do think we are probably headed towards a revaluation of gold. I did, by the way, Pasta Man, I watched that George Gammon video on the Federal Reserve's little manual where they talk about gold certificates. The plumbing is there. The Federal Reserve could just say tomorrow, gold is now worth $10,000 an ounce, and they will print so much money, and you'll watch the gold price will go right up to $10,000. It might take a little while to get there. But I think we're probably headed towards a global revaluation of gold. And look, $10,000 gold, let's say we divide that by 65, the 40-year average gold to silver ratio, that puts us about $150 in silver. That's probably a little bit of a stretch. I don't think we're going there anytime soon. But guys, it's the 2020s, and there is still 4.5 years left in this decade. A lot can happen in 4.5 years of 2020s. So let's not rule any of it out. We got to get past that 50 barrier before we can start talking about 100 or multiples of 100. But gold at $3,300 is cheap, and silver at $39 is cheap. Abso-freaking-lutely. I mean, look, adjusted for inflation, take that 2011 price and adjust it for inflation. We should be in the 60s. Take that 1980 price and adjust it for inflation. I don't even want to think about what that means. Metal should be higher here. Abso-freaking-lutely. Thank you very much, Pasta Man, for supporting the channel. Innovative Sustainable Solutions says, using your affiliate link at Swan Bitcoin right now, PSA for the melon heads, Coinbase has a 2% fee on transactions. Other investment apps I use were at 1.5. Swan is only 1%. Thank you for plugging the affiliate link. By the way, guys, there is an affiliate link for Swan down there. If you click on that link, I believe it's $10 in free Bitcoin that you'll get for using that. I like Swan because you can automate it. I set it to buy a little bit every week, and then I send it to cold storage. Swan's fees are pretty low. The one thing, Swan's user interface can be a little cumbersome. Their security features are pretty tight. That can be a pain in the butt for some people, especially people who are a little less technically inclined. But you also get an added margin of safety in exchange for that. That's something I like about Swan. The only other thing is you cannot sell on Swan. They don't sell at all. You got to move if you want to sell what you buy on Swan, you got to create an account on another exchange and move your Bitcoin there. And as always, guys, don't leave your Bitcoin on the exchange. That's another thing I like about Swan is they even tell you on their website, go ahead and buy your Bitcoin, but then take it off our exchange. They tell you to get it off of their books. So I like that honesty and that added degree of freedom. So thank you very much, ISS, for supporting the channel and for plugging the affiliate link there. Armando Reyes says, I truly believe that Trump wants to see the dollar fall so that he can usher in a CBDC. I don't know about the CBDC per se, Armando, but I definitely think Trump wants the weaker dollar. If he wants to reshore manufacturing, you need a weaker dollar to do that. All right. A weaker currency helps domestically produce products. So absolutely, Trump wants a weaker dollar. Bessent wants a weaker dollar. They won't say it. They won't come out and say it. But to accomplish what they want to accomplish, they need a weaker dollar. Because it's bad press to come out and say, we want a weaker dollar, because then Alexandria Ocasio-Cortez will be in the press saying, oh my God, he wants to weaken your currency. He wants to steal from you. And look, weakening the currency is stealing from savers. But the reason to do it is to make your currency more, or make products produced in your country more competitive so you don't get killed on the Forex, which is why the Chinese have always manipulated their currency lower to make Chinese products more competitive on the export market. As far as ushering in the CBDC, I don't agree with that part of it. Honestly, all this legislation that Trump has sponsored that's moving through Congress right now is all about blocking the CBDC, although the stablecoin thing, you could argue stablecoins is a gateway to central bank digital currencies. So maybe there's a stretch there. But CBDC, Trump is a gold guy, right? I mean, the guy has a gold toilet. Yes, he's into crypto and he runs his rug pools, but I would stop short of saying a CBDC is a big Trump thing. Certainly it won't go over with his base, not at all. Thanks again, Armando, and thanks again for this one. Says, take cover, global reset incoming. See also what I mentioned to Nashville Pasta Man before. I do think that they're going to revalue gold. And a revaluation of gold, you could argue that's a global reset. And look what's happening right now in the silver market. You have retail investors who own silver, small denomination bullion products, are selling them in droves to coin shops who don't have enough buyers to sell them back to their customers. So they're selling them in big bulk amounts to the refiners who are melting it down into large good delivery bars to be sold on the COMEX and the exchanges. Well, who are the big buyers there? It's banks and it's central banks. So what do you have going on? You have metal being sold from retail to big money to the government. Well, that looks an awful lot like 1933, doesn't it? Doesn't that look like the gold? They're not doing it by force, but they're doing it through inflation, forcing people to sell their metals to cover their bills or tempting them with higher prices. And what happens after the central banks get all the metal? That's when they reprice it sharply higher. So, yeah, I can get down with that. Global reset incoming. Abso-freaking-lutely. Thanks again, Armando. Pigo's Trading Desk says, back from Boca Raton, my brother. Good seeing you. Good seeing you as well, Pigo's Trading Desk. Thank you very much, sir, for the good vibes and for supporting the channel. And I hope you had a good time in Boca. Armando again says, if Trump can get a new revised census, he might be able to pull off a win for the midterms. I saw that. They're trying to get a new census to say that you can't count undocumented immigrants and that, that would change. I think California would lose like 5 or 6 seats in the House. I don't think they have time to get that done before the midterms. They'll try. I read about that. I don't think illegal immigrants should be counted in a census. If you're not an American citizen, you got no business being in the census. You certainly don't deserve representation in Congress if you're not a freaking citizen. This should not be a controversial opinion, but it is for some reason. That being said, I don't think that'll happen. There's just not that much time to do it. And a census is a huge operation, a huge undertaking. Thanks again, Armando, for supporting the channel. And it's the Armando Reyes Show, everybody. This is for M&J, and Mom and Dad. Well, thank you very much, Armando. Thank you, M&J. Thank you, Thank you, Mom and Dad, for everything you guys do. Armando's spreading the love this morning. You guys are awesome. Robert Feeds a Machine says, I'll listen, but I don't trust a thing she says. She is a sex trafficker. So, yeah, talking about Miss Maxwell there. They didn't kill her because she is the kid of a Mossad chief, and they still could if she doesn't dance. Was Maxwell's father, he was a British billionaire. I don't know that he was I've read the theories that he was tied in with Israeli intelligence and that Epstein was a Mossad operative. That could be. He could also have been a CIA operative. It's entirely plausible that he was being run by our intel guys. Look, all the powerful people of the world were using this guy. The big banks were in on it. The government basically forced the prosecutors to turn a blind eye to it. The British royal family, American media, take your pick. So the short answer, guys, is they all knew about it and they were all in on it. You can single out one particular group that you don't like. I mean, I could very easily just say, see, all the Democrats are pedophiles. It was the Democrats who did it. Well, then why are the Republicans not releasing the information? Because the Republicans are on it too. That's why. They all did it. Unfortunately, this is not a left-right. This is a them-us thing. Thank you, Robert Feeds the Machine, for supporting the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. Appreciate all the super chats and the support of the channel, guys. Thank you very much. Don't forget that like button and that subscribe button on the way out for the algorithm, should you feel so inclined. Thank you also to my magnanimous Melonheads on Patreon and YouTube for supporting the channel. Appreciate that very much. Links down below, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.